Expectations for new stimulus measures from the leading central banks influence the market sentiment this trading week. The key factor is a remark from Fed's Chairman Jerome Powell about monetary easing in the near future. The US dollar index sank below the level of 98 points and settled down at near the support level of 97.80. If support is broken downwards, this will open the way for the index to 97.40. The Fed's leader acknowledged that the coronavirus spreading all over the world poses a threat to the US economy. The virus outbreak triggered a slump in the US stock market and pushed the yields of US Treasuries to record lows. Jerome Powell said on Friday that the central bank would act as appropriate to protect the economy. Investors took his comments as a hint that the Fed is ready to lower interest rates at the nearest policy meeting in March. At the same time, reports from China reveal that the epidemic is spreading at a slower rate with fewer people infected. Such information encouraged the recovery of the Shanghai Composite. The index rebounded 3.2% in the Asian trade today. Nevertheless, demand for safe haven assets remains beyond. The dollar-yen pair dropped to the levels registered in October. The currency pair halted its decline at the level near 107.50 and began a correctional climb. The price could bounce to 108.45 and even higher to 109.00. The government data showed that the coronavirus caused the sharpest contraction in business activity on record. A PMI for China's big factories plummeted to the historical low of 35.7 in February from 50.0 in January. Taishin and market research groups reported slightly better metrics. Besides, activity among small and medium-sized factories sank to 40.3 last month, the weakest mark in 16 years. Despite such dismal data, investors believe that the People's Bank of China will take measures to prop up the alien economy. Meanwhile, the Australian dollar is going through a correction. The AUD USD pair climbed to 0.6550. Tomorrow, the Reserve Bank of Australia is holding a policy meeting. The cash rate is likely to remain unchanged, even though the time is ripe for the central bank to introduce stimulus measures. Indeed, the domestic economy has been badly hurt from massive bushfires at the turn of the year and the doldrums in China's industry, the major consumer of Australian commodities. Governor Philip Lowe said in his latest speech that the regulator did not find it urgent to cut interest rates, citing the governor pushing inflation to the target level does not require immediate action under the current economic conditions. Such rhetoric erased the short-term advance of the Australian dollar. So in the wake of the policy meeting, the Aussie is likely to resume its decline. In this context, trading the AUD USD pair is highly risky for a while. That's all for now. We wish you again full deals. Don't miss our next video in a couple of hours. See you later.